Hello everyone. I'm going to explain about the debentures today and also about its type, advantages and disadvantages, and also how can you invest into these debentures. Okay, so let me share the PPT. Basically, debentures also it's like a financial instrument. Okay, so where a company like corporations and the government issues these debenture certificates to raise the capital, to raise capital of funds. Okay, so you might get one question like why the corporation government doesn't go for like loan from the bank, provided they like uh, issues share capital. But like for one maybe like if they go for bank, if their bank is charging higher interest rate, so the debentures is good. And even in case of equity share like share capital, like raising the increasing the share capital. Okay. So by that also like they are providing the new equity. They are giving rights for like voting rights to the new investors. Okay. But so to avoid both the reason, like good company can issue debentures. Okay. So if you check like the definition of these or in books and other sites, so mostly it is mentioned like it is not secured by any corporator, but this is not true because debentures are of two types. One is secured and one is unsecured. Okay. So secured is basically where the debenture issuer have to keep collateral to the collateral third party. Okay, so if the company defaults, then the issuer, the third party has the right to sell these assets and then they can provide the money to the investors. Okay, so don't go by this definition. These debentures are not secured by any collateral. Okay, and why people invest into these debentures? Okay, it is purely on the basis of the credit worthiness and the reputation. Okay, so if I give you the example of any new startups, okay, so if you see like the balance sheet of them, if they are giving a very high return, okay, they are getting a very high profit, but they don't have enough capital to increase their increase their operation. So for that, they raise capital through these debentures. So for like start a company, this is the very good means of getting the money from the people like us, okay, and from the NBFCs, okay. So the credit worthiness and the reputation of the issuer through the word of mouth, through the advertisements, okay, through the balance sheet can be uh, examined. Okay, and debenture is like one of the fixed income instrument. Okay, so here you will get a fixed income depending on the payment schedule, like monthly, annually. Okay, depending on which type of what type of debentures you invested. Okay, so I will explain in next further slide about the payment schedule. Okay, let's go to the next slide. Why companies choose debentures? So it comes into our mind. What is the reason? So I told you like one is like getting the loan for their operation. The other reason is like the tax benefit. Okay. So in the liability side, okay, in the expense side, if you see like the interest paid by the debenture issuer to the investor will go to the expense side, and if the expense get increased, it reduces the profit. Okay, and the tax which is paid by the company to the government is purely on the profit. Okay, so it will help the corporation to reduce the tax. Okay, and third reason is like if like company startups company or any new company any company who thinks like later on their company will do good and they don't want to increase their share capital and doesn't want to get the voting right, so that is one of the good way of raising the funds through debentures. Okay, and why should we invest in debentures? So that is like okay, uh, mainly this is the reason why we come to on this slide. Like is like whatever like companies doing profit or loss. debenture holder will get fixed income. Okay, and it is easily sell and buy on stock market. Okay, so you can easily go to exchange and buy it, but it is not for all the stocks which you are aware of, because many of them doesn't have the debentures. Okay, so and also I've written three terms like discount, par, and premium. Okay, so discount is basically, for example, you buy like debenture of MRF. So consider its face value is 1,000 rupees, and if you buy that debenture in 900 rupees, then you bought it at discount. Similarly, if the debenture which of MRF like currently it is at 1,000 rupees and you bought it at 1,000 rupees only, then it is at par. You bought it at par. Okay. So these are financial terms which we use for debentures. And if you bought this MRF 1,000 rupees face value in 1,100 rupees, then you bought it at premium. Okay. And whatever the returns you get from the company, it will be, the tax will not be deducted at the source. Okay, no TDs from the company. Okay, so for example, I gave you the example of MRA. Okay, so if you got profit of like 1 lakh or 2 rupees, and you will get profit in your exchange, like in your zero account or your share fund account. Okay, but it is not tax free. When you file the income tax, you have to show this profit. And I also covered like two types of debenture here in this, like taxable and non-taxable debentures. Okay, so I will tell you like the norm from the nomenclature you can understand this is like this debenture is tax free or non-taxable free. Then you can invest into this, and then you don't have to pay tax on these debentures. So I will explain that in the next slide. Okay, so the features of the debentures is basically face value. Face value is like uh, the uh, the amount which you are going to get at the maturity. Okay, so for example, today is December 6th, 2022. Okay, so if any company has issued the let's say debenture of 10,000 rupees. Okay, so either it will be a face value of 100 rupees or 1,000 rupees, then they will in the multiple of either 100 or 10,000 rupees, they in the multiple of 100 or 1,000 rupees, they will uh, provide into the market. Okay, so then you can buy like 10 debentures or 20 debentures of 1,000 rupees or 100 rupees. So this is the face value, and the same face value you will get in after the maturity. So this maturity can be 10 years, 15 years, or 20 years. Okay, so and you will get the interest rate, like I said, like it is a fixed income instrument. Okay, so you will get the interest rate, or the called the coupon rate. In case of debentures, we call it as a coupon rate. Okay, and you at the time of debentures issuing, so thus you will get the certificate, and in certificate, like you will get the payment schedule also, like it will be a monthly, you will get the interest or semi-annually or the annually. Okay, so this concerns the payment schedule and the maturity date. Okay, so maturity date, like it mostly either it is debentures can be on a maturity date like for 10 years or for 15 years, 20 years. So this is this maturity date. Okay, and then the convertibility of the debenture. Okay, so convertibility of the debenture I will explain in the coming slide. It is basically like two types, like convertible and non-convertible. Okay, so I will explain the next slide. And the credit rating of the debentures. Okay, credit rating of the debentures is basically like is provided by these three companies, ICRA, Care, and Credit. So if it is very highly rated, then you can invest into these. There will be a less default of this. There will be chance of defaulting will be very less. Okay, so if you say like AA, triple A plus, then it is very good rating. Then seniority of repayment. So when the company get default or it get bankrupt. Okay. So when you will get going to get the repayment, like on after equity shareholder or after, like what is the sequence you will get. Okay, so that is also defined on the seniority of repayment, like you will be the first debenture or the second debentures. Okay, that I will explain the next slide. So on that basis, that is also defined on the debenture certificate. So these are the 7 to 8 features which is defined on the certificate provided to the investors. Next is like type of debentures. So one is secured and one is unsecured. So secured is basically when the debenture issuer places a collateral with the third party. So if companies goes bankrupt, that time the third party has the rights to sell the assets. Okay, and then and the money which is after selling can be distributed to the investors. So this is secured and unsecured where no collateral is placed. Okay. So that is completely on the basis of credit worthiness you have invested into these debentures. As it is secure, then there will be a low risk and low return, and in unsecured, it will be high risk and high return. The other type is redeemable and irredeemable. Okay, so mostly in India, it is only redeemable, only allowed, not allowed, and this irredeemable is not allowed in India. Redeemable is basically you get a date like maturity date. After on that date, you will get a return. I wrote bond, but it is a debenture. The issue of the debenture must to pay their debt in full. So that the maturity date is basically you on that date you will get a full payment, interest and the principal amount, the redeemable. Okay. And in case of irredeemable, it will you will get like repay you will get an interest rate till the time company gets wind up. Okay. And I said like convertible and non-convertible convertible also mentioned on the debenture certificate. So convertible is basically apart from the maturity date, you will get one more date on your um, debenture certificate. Like for example, the maturity date is for 10 years, and you will get like after 7 years you can convert these debenture into equity shares. Okay, so this is called convertible debenture. So it become a hybrid financial product of debt and equity, and like you converting to equity comes at a price. So since pay a lower interest rate compared to the fixed rate investment, and non-convertible you cannot convert into equity, so it is a high risk and you will reward with a high interest rate. And the other types is registered and bearable. So registered is basically when this debenture is registered on somebody name. Okay, so if you want to buy it, then you have to uh, inform that the debenture issuer that the ownership has been changed. Okay, so one benefit is that even if it is like lost or what have nobody can take advantage of it. Okay, but in case of bear, like it is like whoever having this debenture will be the owner. Okay, so it's basically like you are holding 1,000 rupees note or 2,000 rupees note. If you are having, you are the owner of it. Okay. So and the bearer, the ownership is not registered. The owner of a bearer debenture is the person in possession. And first and second debentures. So this is also important. Like who will be repaid? Who will be paid in case of bankruptcy? Okay. So first debentures will be repaid before the other debentures. So the first debenture you can consider as like if today I am investing in 2022, okay, and this debenture is for 10 years. Okay. Later on to 2025, a new debentures come into also issued like for 10 years. Okay. And well, later, like after 2 years or 3 years, like in 2027 or 2028, the company got default. So on which basis the uh, money will be repaid? Money will be paid to the investor. Okay. So who will be the first debentures? They will get the money first, and then the second. This is the first debenture and the second debenture. Okay. And the other type is callable and portable. So the callable is good for the issuer party. Okay. So they can redeem the debentures before the maturity date also. So in case of issuing the debentures, they mention this that this is the callable debenture. Okay. And that's why the issuer provide the high coupons, and the valuation is in case of callable, it is yield to maturity, not yield to call. Okay. So in callable, the issuer can redeem any time before the original maturity. For example, the maturity date is for 15 years. Okay. But issuer can redeem any times, like they mention also in the debenture certificate that after 5 years, this can be redeemed any time, like after 10 years, 15 years. So that is also mentioned. But and in case of portable, it is good, it is beneficial for investor. Okay. So it permits the investor the right to look for redemption from the issue before the original maturity date. So in case of portable, they don't have to give any penalty. They can even do redemption before the original maturity date also in case of portable. Okay. But it is a disadvantage for the issuer because it will like leash the cash flow problems for the issuer. And yes, so that's why the coupon rate is not as high as compared to the callable payment. Okay. So disadvantage of investing is from like the investor purpose is like no voting right. Okay. And if the company default, then the return of principal amount takes a lot of time. Okay. And one of the rule like normally company follows like Passu, if it is mentioned or mm, if it is mentioned, then in the balance sheet, then it is followed like if the debenture who has invested into 2022 and who has invested into 2025 for same year, they will be treated equal. Okay. In case of company default. But if this rules is not mentioned in the debenture certificate, then who invested first, like who invested in the 2022 will be considered first as compared to who invested into 2025. Okay, if company default into 2027 or 2028. Okay. And the debenture of the other credit of the company, they cannot claim profit beyond the interest. Okay. So if company is doing really great, like then equity shareholder are enjoying their so much profit, like buying and selling. So that time debenture holder only get interest. So that is one of the disadvantages for investing to debenture. Okay. And the disadvantage of issuing debentures to companies is that so if the company uh, are not doing good, then also they have to provide the profit. They also have to provide the interest to the investor. So that is one of the issue. And uh, like each company has a certain borrowing capacity. Okay, the capacity of company to further borrow funds reduces. Like after issuing the debentures, they cannot take more funds from anywhere. And this like the third case, like assets against which charges are met cannot be employed freely. So there will be like I in the starting like I mentioned like collateral. So in case of collateral, company keep the assets, like either it will be a fixed or floating charges on the assets. Okay. So in case of assets against which charges are met cannot be employed freely for the company uses because they are under the control of creditors. So this leads to the underutilization of assets and resources. 14. And this is like how to invest. So this is like you understand what are the advantage and what is the disadvantage. So if you want to really invest into debentures, you have to take care of these parameters like specification. What is the meaning of N1, N2, and N3? What is the real meaning of it? So if you click here, if you know the company, like you want to invest into NTPC, MRF, or um, BHG, SBI, so you have to put here NTPC like that, and later on, like N1 and 2, these you can see the series. Okay, so through these series you will get the series name, ISI number, issue date. Okay, and if you see the maturity date is 2023, so this debenture is for 10 years. Okay, the rating is also given like AAA rating from CRISIL and ICRA. Okay, and the coupon rate is 8.41%. Okay, so you if you invest into these debentures, you will get every year 8.41%. Okay, and currently if you see, this is currently trading at 111. So this debenture is trading at premium. Okay, coupon rate is 8.41, and then issue description. So I will explain what is this issue description significant. So it is written like 8.41% SRNCT Series 1A. Okay, so 8.41 is basically the coupon rate. S is for secured. So I told you secured and non-secured, unsecured. When the company places a collateral, then it is a secured. And the R is for redeemable. So uh, redeemable and non-redeemable, like when company will have to, like they provide the maturity dates. In this case they have provided 2023. Okay, and non-convertible convertible, so you cannot convert this into equity shares. Okay, so first four letter, like what is the significance of this, and then you will get series 1A. So series 1 is basically, if you see in this tabular chart, series 1 is basically only for uh, no annualized E. Annualized E, you will get written annually, and for non-retail category. So there are four categories. One is category 1, 2, 3, 4. If you see, one is for qualified institutional buyer, second is for corporate, third is for high net worth investor, and fourth is for retail. Okay. So if we go back, so if you are a retail, we like if we consider like we are into retail category, then if you invest into series 1B option for 10 years, then you will get return of 8.66%. Similarly, if you invest for 20 years, then you will get 8.91% per annum. Okay, but you have to find series 3B. Okay, and how you will find series 3B? By clicking on N1, N2, N3, N4, which one is series in B series, if you are in retail investor. Okay, but okay, but if you invest into series 1A, okay, because you, if you see on the Zerodha, you are allowed to buy N1, N2, N3 also, and N1 comes into series 1A, which is for institutional, for which is for qualified institution via corporate HNI. So you will get return on the basis of this, on the basis of return into more into detail in this. Okay, so for that you have to read it. So I'm going to conclude on this, like if you want to invest into debentures, you have to understand the terms like which I explain as are. Okay, what is the return you are going to get? Okay, so thank you for listening me, and I will put this PPT in my uh, in the description, so you can download it also, and you can comment if anything, if any particular uh, module or module or any particular financial instrument you wanted to uh, go, like teach me or provide a PPT or document on. Thank you so much.